Good day and welcome back to another week of Talking Technical. And I want to cover a few weekly charts this week. And the reason why I want to do that, I had a very interesting chat to somebody the other day. And this guy said to me, Franz, I want to really get involved with this market now. I want to go in and I want to buy it full tilt. And the reason why I want to do it is because interest rates are going lower. And we know that triggers a lot of capital in the world, a lot of liquidity, and that's why I just want to buy the market. That always makes me a little bit nervous because that tells me that the guy is over optimistic. And I've seen in my years behind the screen that markets do not just go up forever, it also give you some breathers. So it's always better to maybe buy it on a pullback than buying it right at the top. I know some guys got the philosophy the moment there's a new high, you just get in and you buy. And yes, a lot of people make money on that. But I have also seen that a lot of times, the moment you buy the share, right at the top, it turns around. So I'm going to cover a few charts this week, and they are the big drivers of the world. And hopefully, I can also do the top 40 so that we can also cover that. But let's first look at Apple. Now, remember, this is a weekly chart. This is the 40-week moving average. And in your mind, put the scenario of this chap that says, I just want to buy the market because I believe that the market will also treat me well and it can just go higher. Now, first of all, if you look at the weekly chart of the Apple chart, and I mean, there's nothing wrong with the company. It is one big story to the upside. You get these tiny little breathers, and what I usually say to myself, if I look at the chart from 2020, just go one way up, no pullback. It is just a 5% or a 6% pullback, and then really it rushes off again. I always say to myself, okay, for how long can it carry on? Now, as a lot of long-term investors will tell you, it can carry on indefinitely. That's maybe true, but I'm a little bit nervous because I've also seen, like years in 2008, even the COVID market, everybody just believed that the markets will hold, and they really fell on the heap. And yes, of course, every time the people come in and they just buy the dip and they believe that they will be right. So there's the answer. If you want to buy the market and you believe that it's going to go higher, never buy when it's straight up. When you see lamp pole formations and you see a tiny little dip, don't buy it. Let's rather use a proper line, like a support line. You draw it in and you wait for it. Let's say that was your support line, and you wait for it to come back to the support line. You see, yes, it goes below the support line, it turns into a resistance. But what do you spot? You spot that the share is oversold. It is really at the bottom, and it goes below that, and suddenly it prints some beautiful candles. That's maybe the time to get back into the share. And in this case, it is Apple. Now, let's look at that sell-off. It came from 199 to 170. That's barely 5%. But if you buy it there, right at the top there of that candle where the confirmation is that it goes above the support line, there's the support line. If you buy it there, yes, look what the rally gave it to us, 177 all the way to 230 in a few sessions. But on the other hand, if you read your charts, there was already a sign that it maybe rallied a little bit too hard. Now the guys will say, no, Franz, look what happened. It just rallied up and it came back and it went straight up. Yes, that's always the case with market favorites. So I will say my lesson is, if you want to buy the market and you love the share, always look for a support line, always look for a place where it's oversold, and only then, if you get candles that confirms with that, then you get back into the market and you buy that share, because then it can treat you well. I always say to my students, I say it a lot, if you buy the market there and your stochastic is in the middle, where's your strategy? You have got no strategy. You don't know which way you're going to go. If you are right, you will say, yo, I'm happy and I'm just holding on to the stock. If you're wrong and you want to add to the position, where do you add? You only add when your indicators is at the top or the bottom. You never add in between. So remember, technical analysis is not the holy grail. Technical analysis will guide you, but when you need a guidance, use the indicators to get either to the bottom or to the top, and then you wait for reversal candles before you do anything. Look what happened here. It was low in 223. There was a tweezer bottom, and it rallied for consecutive weeks. And look at it. Was overbought for a long time, and only then it pulled back. And what happened? It gave a brief rally. It made a double top, and it came back. So please, maybe I'm wrong, but I always say don't buy the market when your indicators is at the top. Look at that. Let's say you are excited. There you are. There's a shooting star, but forget about that. There's your market. It's overbought. Deluxe 94. It comes back. There you are. It's at 5. So try to control yourself. We chatted about it last week. We said that robots cannot read emotions. So if that's true, if they cannot read emotions because you've got a heart and you've got a brain, that is your emotion. So if you can follow your emotions and you can discipline yourself, you only buy when the market is oversold and not when it's overbought. Let's have a look at another one. Let's have a look at Nvidia. Nvidia is the market favorite of the world for many years. I mean, nothing can take this company back. Look what happens here. There's gaps. I just want to take it all the way because this is a weekly chart. Now, let's say you want to buy it now and you bought it here right at the bottom when the stochastic was say 20. For me, it was actually too high to buy. But let's say you bought it in October 2022. From there, one beautiful rally. Look at your stochastic at the moment. It's right in the middle. Yes, a lot of people will say France, but just look at this trend line. There's the trend line, and it's on the brink of breaking up. That can be 100% true. But if you are a technical analyst and you say to yourself, you only want to use the opportunities when the market is in a corner, you will not buy at a 50% unless you are a momentum buyer and you just chase momentum. If it breaks that line, you just climb into it. Then you say to yourself, yes, I'm a momentum buyer. I buy it. There's my stop loss. I chase the momentum and out I go. But what usually happens is, yes, the guy buys it and he's happy with the momentum, but he can never decide when to take profit. And just as he thinks that the market is going to take the share even higher, it turns around and it falls on a heap. So be careful of doing that. Let's have a look at another one. Microsoft, also one of these big drivers. Now, I'm talking to that guy that actually say to me, Frans, I just want to buy the market. Look at this 40-day moving average. It's turning into a resistance and you want to just buy the market. What do we see here? We see a head and shoulder formation in Microsoft. This is one of the biggest companies in the world. It's a big driver of the S&P 500. There's the left shoulder. There's the head. There's the right shoulder. The neckline sits at 397.92. That means that if this turns into a resistance, this 397.92, the share can easily go a little bit lower. The share can go to 371. And if it plays out in full, it can maybe go all the way to 347. And look at your stochastic, right in the middle. It does not give you a buying signal. And please keep that in mind. The big thing here is to control your emotions. Let's have a look at Berkshire Hathaway. Remember, Mr. sorry, he's telling us that he's got loads of cash. I mean, Warren Buffett, he says he hasn't got a lot of shares. And look what's happening. His company is doing well. Why? Because he's loaded of cash. He gets wonderful interest rates. He's not worried about the market, and he only waits for the market to come back. I think the only share that I read recently that he buys is Occidental Petroleum, and in actual fact, that chart only starts to look good now. But look at this. This is a guy that plays absolutely safe. He doesn't gamble. He doesn't wait for the share to run away to buy it. Excuse me. And look at the share. It gave us a buy in October 23, and since then, it went up gradually. And why? Because the stochastic is nowhere, but he sits on cash. And while he sits on cash, I mean, Einstein learned us that the thing of cumulative tax, compounding interest, there's nothing that can beat that. So I hope that's a lesson for the guy. I don't think it's time to buy the market. I think wait for oversold indicators and then you get back in. And by the way, if you don't get back in and you sit on cash and you earn interest, you can also not going bankrupt by doing that. Well, Visit our website www.fransdeklerk.com for more info, and we'll chat again.